No, I think the story remains intact. If we look at it from a global lens, it's always more restrictive from the platform on the technology and antitrust point of view from European regulators, whereas U.S. and China, in many ways, due to their home market and the strong data supply, they are less concerned. But with the U.S.-China relationship, this become in many ways a geopolitical card as well. But overall, I think I definitely agree with the strategy's overall view. And through the trip, I definitely see the Chinese policymakers are more committed than ever in terms of opening up the capital markets to really let the market sort of pricing their fixed income and stock market.
And Thomas, I wonder, this commitment coming from China, whether it will be met with more interest coming outside of China in the way of U.S. fund flows perhaps going into the country. Because we've heard some suggestions that under a Biden administration, you may see renewed interest among investors who have previously been underweight China, saying, okay, perhaps we take another look here, given that they expect some of these geopolitical clouds to wane.
No, it must be mutually beneficial for global investors coming to China to grow their investment return and also they grow their business, right? So far, I think although the rhetoric has been relatively muted leading into the U.S. election, but this factor will be gradually moving away. So I was at quite a few global investors conference in Shanghai and China, and you can see, the evidence of investing to China to generate alpha and a return from an investment point of view, and also building the business on the ground to grow their AUM and overall business. So it is. I will see that trend would continue. There will be bumps on the road on the back of geopolitical dynamic, but the structural growth trend for both China and also global investors into China will remain.
Thomas, you're bullish on the market trend for 2021. What drives your optimism here, and how much upside do you see for the market, such as the CSI 300 in the region?
Sure. I think there is a structural trend, and also there is a more detailed stock level. I think structurally, China is, with the capital markets reform, is going through this equitification of capital markets transformation, which will rejuvenate, roughly about $70 trillion of, the Chinese household asset, mostly still in bank deposit, into the capital markets. And obviously, foreign inflow continues to rise, as we discussed. At the same time, in terms of, if you look at the bottom up, it's really the earning turning around stories. We are looking at somewhere around 0 to minus 1-2% of EPS growth for the overall CSI 300. We are expecting this to turn around to 16 or even 18% next year. So that would help the valuation. So we are looking at base case close to 10% year-on-year growth, and then potentially up to 20% from here next year.